Hello everyone and welcome to my YouTube channel. Our today's topic is financial markets. Before starting with the topic, we must first understand the meaning of financial assets. Financial assets, financial securities or financial instruments, they are one of the same things. For example, shares, debentures, bonds, commercial papers, commercial bill, they're all called financial assets or monetary assets or financial instruments or financial securities. In an economy, students, there are two main sectors, households and business firms. Households save the funds, so they are called the savers, and business firms invest the funds, so they are called investors. Households are savers because they save the funds, and business firms are investors because they invest the funds in different projects for the growth of the economy, right? Now, financial market acts as a link between households and business firms. Financial market is a link or intermediary between business firms and households. Students, we all know that business firms need funds to carry on day-to-day activities and to invest in big projects. So they need both long-term as well as short-term funds. They borrow this fund from the savings of the savers, from the savings of the households, either through banks or through financial market. This financial system clearly tells us that households save their funds either in banks or in financial markets by depositing or investing in shares, debentures, bonds, treasury bills, etc. So there are two ways through which households can save their funds. Either they can deposit in banks and earn their interest, or they can deposit the money or they can invest their money in financial market. That means they can invest their money in shares, debentures, etc. This money is borrowed by business firms for meeting their funds requirement. This is the financial system. We as households, we save our funds, we save our money. How do we save? We may save by depositing in banks, okay, or financial institutions. How financial institutions? We may deposit our funds in shares, debentures, bonds if we want higher interest, or we're not concerned about a fixed rate of interest. We take the risk, we can take the risk, we can bear the risk, then we go for financial institutions, right? So there are two ways we can deposit, we can save our funds. That is, either we can deposit in banks or we can deposit in financial institutions through financial markets. Now, what do business firms do? Business firms borrow that funds that is saved by households. The money that we have saved either in banks or in financial market, that is borrowed by business firms for meeting their requirements. Therefore, financial system mobilize the savings of households and channelize them for investment used by business firms. So students, from the financial system we understand that financial markets enable the households to save their surplus funds and enable the investors, that means business firms, to borrow those funds and channelize them into most productive uses. Now, this function of linking the savers and investors by mobilizing funds between them is called allocation function. So, financial markets perform allocative function by linking the savers and investors by mobilizing funds between them. A financial market is a market for creation and exchange of financial assets. Financial assets means securities or financial instruments like shares, debentures, bonds, as we've already discussed. Now, creation means initial issue of these assets. These financial assets are first issued in financial market and then they are exchanged. Exchange means sale and purchase of financial assets. Okay, so first is initial issue of share, that is also done in financial market, and then it is sale and purchase of shares, that is also shares or securities, that is done in financial market. So financial market is a market where creation and exchange of financial assets take place. Now there are four main functions which are performed by financial markets. Number one is financial markets mobilize the savings and channelize them into most productive uses. Financial markets provide different investment options to the savers. The savers can save their funds in different options available in the financial market. Therefore, financial markets help in channelizing those surplus funds into most productive uses. Facilitates price discovery. We all know that the price of anything is determined through the market forces of demand and supply. Households supply funds. Households are the savers, no? They are supplying the funds. Households supply funds and business firms make demand. Business firms are demanding the money, so business firms make demand. Now, these forces only help in establishing or determining the price of different securities and financial assets in financial market. Provides liquidity to financial assets. Students, we all know that in financial market, securities or financial assets are first created and then exchanged. Created means initially they are issued, and then exchange means sale and purchase. It provides an easy platform where the securities can be exchanged. That means it can be easily converted into cash. So financial markets provide liquidity to financial assets as and when required. Reduce the cost of transaction. Financial markets provide a common platform for buyers and sellers to meet their individual needs. Okay, financial markets provides all the information related to cost, availability of securities, price, etc. All this, if the companies had to collect this information, it would have been very difficult for the companies and the individual investors. But this is provided by financial market. They do not have to go and search for this information, which is easily available through financial market. So by this way, it is reducing the cost of transaction of investors and the savers. They do not have to search here and there for the information. They are getting every information through financial market. So it is reducing the cost of transaction. Financial markets consists of two major segments, money market and capital market. Money market is the market for short-term funds, that means which have maturity period of less than 1 year. And capital market is a market for medium and short and long-term funds, that means which have maturity period of more than 1 year. Stay tuned to next video for money market instruments.